Let's bring in our CNBC technology correspondent, Steve Kovac. He's been on TV a lot today, along with Tim Horan at Oppenheimer, who says this could chill Microsoft's ability to do any other deals for now. Tim, I'm going to begin with you. In a funny way, did the UK's competition authority do Microsoft a favor?
Probably. I mean, this actually helps out earnings a little bit because they can earn a higher return on the cash in the bank right now than they can investing here. And, it's hard to see how this is so strategic for Microsoft. It's kind of less than 2-3% of earnings in the gaming sector. Right now, less than, 5% of revenues. And they were paying an extremely high price for the asset also.
To that point, Steve, gaming is a small but not insignificant portion of Microsoft's revenues and profits.
And they've been doing this business for 20 years.
And they've been doing this business for a long time. But to Tim's point, why not step back and say our bread and butter are the kind of enterprise software things that we sell, and now AI.
That seems to be what investors want, too. Look at Microsoft shares right now.
Look at the shares.
It's up. They had that knockout quarter they reported yesterday. Azure still growing like crazy, this cloud product. Then all the excitement around AI, that's where all the focus is now. It's really funny to think back when this deal was first announced at the beginning of last year. One of the reasons they said they wanted to buy it was the metaverse. Remember the metaverse?
Yeah,
exactly. So, look, it's really not playing out the way they originally saw it. And, look, it is too expensive. Right after they announced the deal, we saw what happened to the market throughout the rest of the year. It got way too expensive. $3 billion is the break fee. I think people would probably rather than spend their money on the break.
$3 billion than 60, what is it,
69.
69.
That was one of the reasons people thought, well, you can't lose in Activision shares because you get the break fee, or they've had good games lately, or the deal gets consummated, and then, of course, we're going the other way.
And they put out earnings early today. Now, a spokesperson tells me they put the earnings out today because, look, they were getting tons of inbound requests saying, what does this mean for you? Well, look, it's all addressed there in the earnings. One way, that's true, and they have a really strong statement out against the CMA. Another thing that's true is they're a healthy company. They beat the top and bottom lines. They still have plenty of room for growth. They have a lot of cash on hand, something Bobby Kotick has already talked about to our friends on Squawk Box, and I'm sure we'll mention again tomorrow when he's on. And that's the key here, that the company will probably be just fine on its own, and potential for mergers with maybe another game studio. We'll have to see.
Well, that, Tim, is what I was going to ask you. Kind of broaden this out to big tech in general. I'm not sure if they're in the mood to acquire right now. Maybe if they need AI help, that's where they would be looking. But will they now feel as though there's a chill on any deal making because of this ruling?
I mean, I think every hyperscaler has to think that this is definitely a political decision. There's not a lot of market dynamics that you could justify blocking this transaction with. But, people are worried about the future. I mean, Microsoft is likely going to dominate AI here, and AI is going to impact so many industries that are out there. And they could end up dominating, gaming in 10 or 15 years by combining this with AI. But that said, I think Microsoft will look to do tuck-in acquisitions. And I think they're going to look to use AI themselves to kind of help them create content because they need better gaming content. Their gaming content, is bad.